Starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that.
The fact that India is the Maharaja of tariffs, it's the highest tariffs in the world, charging on American products.
We therefore weren't doing much business with India, but they were doing business with us because we weren't charging them. Foolishly, we weren't charging them.
We are engaged, we remain engaged with the United States, and at this time, I can't say more than that.
Mr. President, this is Chandra Shrikant from India. Can you give us an update on the India-US trade deal?
First of all, I have great respect for your Prime Minister. He's a fantastic man and friend of mine, and we're going to have a good deal.
Since I arrived in India about a month ago, I have said, and I truly mean it, that the two leaders have a great personal relationship. And that is something that carried this deal forward.
Very hopeful of a very good deal with the United States.
What excitement, what drama, and absolute rocker of a night, if I may say so. The trade deal getting announced. Nifty, historic open, 1,200 points higher. 1,000 points, 26,030. Nifty Bank, 23,050, which is 60,950.
This is positive from a sentiment point of view.
The markets was lacking a catalyst, and this certainly comes as a catalyst.
The India-US trade deal sparks the mother of all stock market rallies in India, with a benchmark Nifty opening 1,200 points higher before some profit-taking trims gains. The advance decline ratio is sharply skewed towards advances.
A phone call between Donald Trump and Narendra Modi seals the long-awaited US-India trade deal. Tariffs on a wide range of Indian exports will now drop from 50% to 18%. Stocks of textile stocks, chemicals and seafood exporters are rallying.
Indian industry leaders suggest there may be relief beyond the reciprocal tariffs, with the US imposed national security-led tariffs under Section 232 on metals and auto products also being lowered to 18%.
PB Fintech's board will meet on the 5th of February to approve a QIP to fund an acquisition. Meanwhile, Aditya Birla Capital's housing finance arm mops up 2750 crore rupees from Advent as growth capital for a 14.5% stake. Both deals were earlier reported by CNBC-TV18.
Finance Minister Nirmala Sitharaman, in an exclusive chat with Network 18, says she will be focusing on divestment and the budgeted target will be met. She also clarifies that STT was levied only to curb speculation and the government is not ignoring the rupee but taking a realistic approach.
It seems like the night has never ended. It's still continuing from where we left off from yesterday. You're watching Business Lunch. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Horvas Patakia. With me, as always, Arundhati Ramanan. Arundhati, good afternoon.
Good afternoon, Hormaz. Hi, guys. We started with the budget this week. Now we have this big trade deal, and then we've got the monetary policy to look forward to. But what a day. Nifty opening over 1,000 points higher. Coming off those highs a little bit, but nothing to complain right now.
Why would you complain? 700 points higher. You don't see that every day on the index, right? As a 1,000-point move, although was the biggest in history in absolute terms for the index, still managing to hold that 25,800 mark as we speak. And nobody's really talking about the fact that today is the weekly expiry of the Nifty. That is usually the big talking point on a Tuesday. But the big talking point today is, of course, the trade deal. And that's showing up on the market as well. Now, the Nifty Bank as well, that was the one that was leading the laggards over the last few days. And the Nifty Bank, after the kind of rebound that it has seen, 1,500 points higher now on the index, above the mark of 60,000. We spoke to a lot of experts earlier in the day, and they've mentioned that the 60,000 mark is going to be a very important one for the Nifty Bank. Just a couple of sectors. Of course, the textile names continuing to have that 20% upper circuit. The Gokal Das's, the Wellspuns and the likes continue to trade with gains. Then just pull up Zydus Wellness. That is an earnings reaction that has come in just a few minutes earlier. The textile names, of course, 10 to 20% higher, but Zydus Wellness reported a net loss this time around compared to a profit last year, although the operating performance, though, was stronger on a year-on-year basis, but the stock has slumped to the lows of the day. In a market like this, when almost everything that you see is in the green, the Zydus Wellness is down 4%. And the other one that's not in the green is PB Fintech. It's down around 5.5-6% on last check. The board meeting on the 5th of February to consider fundraising, it's 5% lower there as well. So there's plenty of red, plenty of green actually, some red as well today.
Very little red, but lots of green, and those sectors, so many sectors doing well. As Hormas pointed out, chemicals, all of those export-facing stocks doing really well. On top, leading the pack is that realty pack, which is doing really well in trade today. All of those stocks in the green. We've got even pharma, we've got the auto stocks, all of them doing well today. But beginning with the top story of the day, after a long wait, India and the United States have finally agreed to a historic trade deal. The United States will cut its tariff on Indian goods to 18% from 50% earlier. The tariff on India is the lowest amongst emerging market peers at 18% and significantly lower than that of China, which endures a tariff rate of 34%. The United States ambassador to India, Sergio Gore, also told us yesterday India would also stop buying Russian oil. Also hear out what the Commerce Secretary had to tell us last night.
We remain engaged, very positively engaged, and it's progressing very well. The two frameworks are still in place. The larger framework is going to take time because US is a big economy and a larger, deep, wider FTA will always going to take time. But the one which can be done in the short run is the one which is an early harvest, can address the reciprocal tariff bit, is also getting safe. When it will happen, how fast it will happen, these are the questions. I think I'll not put a date to it, but we are hopeful that we should get it sooner than later. One of the key discussions in this is how we are able to align our tariffs on both sides to see that we work towards a more balanced trade between the two nations. So that is going to be the core of whatever we achieve in the first.
And here's what market veterans have to say on the deal announcement and its impact on the markets.
I agree, Nigel. I think the markets was lacking a catalyst, and this certainly comes as a catalyst. In fact, I jokingly say that people had just stopped even talking about stocks. It was all about gold, silver, and I have never seen phones not ringing after a budget the way this time it was quiet, because no one was just interested in knowing what to buy. So I think this comes as a very, very pleasant surprise. It helps the, I would say, the mood, which was the most important. It definitely helps the economy, the corporate profit growth, and hopefully the currency should also respond. So I think all in all, the positioning is light. FIs have been short, has been seen by the futures, open interest. Position on the domestic side, at least on the speculative side, is low. And expectations after the budget fall were also very, very low. So this definitely comes as a big, big catalyst.
Undoubtedly, Prashant Bhai, this is positive from a sentiment point of view. There was a hanging sword on Indian equity rates and currency market because of uncertainty over US tariff deal. Obviously, we stimulated our economy. So from a growth point of view, there was no negative impact. But there were sectors like textiles, aquaculture, handicraft, gem and jewelry, which were getting impacted. Now, this first boosts sentiment. Second, it provides support to sectors which I mentioned. And finally, Prashant Bhai, we have to go through the details. Devil is always in the details.
Completely understand the way markets are behaving. People must have been short or there is a lot of excitement. But I would expect, just like it did not have too much impact on the downside, I don't think there is any durable, meaningful impact on the upside either. But it's a very good thing to happen. See, foreigners have been underweight India for three simple reasons, in my opinion. One was India was pretty expensive 18 months back. Second, earnings estimates were very aggressive. We were simply extrapolating the faster growth in earnings coming off the COVID lows. And finally, I think India was missing the popular narratives of these times, which is AI or semicon, etc. And these were the reasons why we saw so much selling. I think with the currency where it is, with the valuations having come off, with so much selling behind us, I think I would be a little more optimistic on foreign flow.
So which sectors are in the spotlight? Once the worst hit sector with a 50 to 70% revenue exposure to the US is now flying high. Gokuldas, KPR Mills, Welspun Living all surge as India with an 18% tariff is now placed better versus exporters like Bangladesh and Vietnam. The managements of Raymond and Perel Global are also bullish on the US business. Listen in to what they had to tell us.
Of today, for my total export which is happening, that is close to around 12% of my total turnover, out of which 6% comes from the US. I mean, the 50% used to come from the US. Now with this steps, we see a very huge growth which is happening in terms of the US demand coming up in the next couple of years, simply because not only the reduction in the tariff, it gives a great impetus for us as compared to Vietnam and Bangladesh, where the tariff is still 20%. In case of India, it has gone down to 18%. So that also gives us an impetus in terms of capturing the market in the US in a very big way. So we expect that today the market which we are capturing close to 6% of our turnover, that is going to become in the double digit in the near future. We'll go definitely up to 10 to 12% of the total export which we are doing today. That alone is going to come from the US market.
News that has come in the last night. Definitely, we look forward to the growth both in the top line and bottom line in India as well. Bottom line, this is a kind of advantage that we are giving to the customer just to maintain the business in India. So our customers give us the choice. Either you make this production from the other countries and, which is more of the same balance. Everybody within the 19-20 range of tariff. Now, to compensate that out of India, we were giving this 50% discount. So that I think goes away. So I don't think it's like passing off. It was not a sustainable thing to pass off to any customer. So I think this will definitely come to the bottom line.
The textile stocks doing well for themselves today, continuing to trade with gains of 15 to 20% as we speak. Now, the reduced 18% levy is expected to help auto ancillaries sustain their global order inflows and aid their margins as well. Now, we spoke to Bharat Forge's Baba Kalyani, who told us that demand could rise up to 25% in the next quarter. Listening to what he and the management of Ramakrishna Forgings had to tell us earlier in the day.
It's been a very, very positive development, and I'm very happy that, we have got everything done as far as India-US trade deal is concerned. But I believe from whatever I've heard from this morning from the US and late last night, that Section 232 also is under discussion between India and the US to bring it all to a levelized tariff of 18%. If almost everything will come under 18%. Okay. And if we look at our exports traditionally used to be in the region of about 500 to 550 million on a revenue of roughly about 1 billion. So 50% of our exports were to North America. 50% of our revenue came from North America.
On that note, it is time for us to head into a short break, but more news and updates coming up on the other side. Stay tuned.
Welcome back. The markets are doing what they are after the announcement of the trade deal, but the other major reaction has come in the rupee, and that is, of course, after it strengthened by over 1%, buoyed by this trade deal between the two countries. Dealers, however, say that further gains will come only after one sees foreign funds bringing in the dollars and buying Indian equities. Lata is here with more on this. Lata.
Yes, first the number, the rupee opened 1.2% higher. In number terms, it was about 90 rupees 40 paise to buy a dollar. Let's remember it closed overnight, that is on Monday night, at 91 rupees 52 paise. So, you know, it was a gain of over 1 rupee 20 paise when it opened. The point is, you know, New York trades, what we call the NDF trades, offshore market trades, that had already started reacting to the news overnight. And there we had seen 90, 60, 90, 50. So it was expected to open higher. And even on Monday, we had seen the rupee trade or end the day a good 0.5% higher. And people were saying it's not because of RBI. There doesn't seem to be dollar demand. It looked like already the short rupee, long commodity currency trade was shifting. And that's why the rupee is strengthening. We now can realize that some people in New York probably knew or were smelling that the deal is coming. But the important point is the huge recovery of the rupee was unaided by the Reserve Bank today. Dealers said they were not in the market trying to lessen the appreciation as was expected. The key point is dealers don't expect a further appreciation immediately because they want to wait and watch to see whether foreign investors are coming in. Ultimately, you want an actual flow of dollars, not just, you know, that our exports should grow, but on a daily basis, we want FPI flows. And we don't know as yet whether the FPIs are convinced enough to come and buy dollars. So 90 will not be crossed, is what the economist from Goldman Sachs told us. Also because the Reserve Bank will not want to lose the advantages of a weak currency. Depreciated currency makes exports attractive, makes imports difficult, so domestic industry gets a better chance. And finally, there are others who say that the striking of the deal will ensure that India's growth itself improves a bit, and therefore the foreign investors will come. So BNP Paribas' view is that in the medium term, that is by the time we reach middle of this year, we are going to look at it 88 to 89 rupees to buy a dollar.
All right, Lata, many thanks for taking us through those details. But as promised, let's shift focus to the bond market. Manisha Gupta joins us now with all of those details. Manisha?
Well, it has been a back-to-back action in the Indian markets, whether it is about equities, rupee and bonds for that matter. After that big reaction to the India's budget, where we did see higher than expected borrowing and expenditure from the Indian government for FY27 slated out, it really is about the US and India trade agreement, and that seems to be ruling the markets right now. So we have seen the bond yield slip slightly, 4 to 5 basis points as the markets open today. Well, India and US finalizing a long-awaited trade deal has supported the equity markets, which have jumped up. We saw the rupee open up by nearly 121 points on the higher side, and the bond yields seem to be taking their sense or support from there as well. Interestingly, the trade deal positive possibilities are quite a bit, and that is where we are looking at support coming in from. The markets do believe that FPIs will come back to the Indian equity and debt markets, and that would bring in liquidity and more action coming in here. It also is about inflows of further dollars coming into the market. There also is a possibility of Indian bonds getting included in other global indices as well. So whichever way that you look, it seems quite positive to the markets right now. The support from the Indian rupee, the inflows of the US dollars leads to be supporting bonds right now, with markets believing that this week at least this euphoria could just about continue.
Manisha, thank you for that update there. Numbers from Adani Ports flashing at the bottom of your screens at 22% revenue growth compared to last year, 9,704 crore. You look at the operating performance as well. On the margins front, has the company fared 21.2% growth in the profitability as we speak compared to last year. So 8% higher, still holding on to gains from the morning is Adani Ports. Take a short break. More news and updates on the other side. Stay tuned. Welcome back. Earlier in the show, we spoke about PB Fintech as the one stock that is bucking the trend today. That is because the sources are saying that the board is going to announce a fundraise on the 5th of February. Yash is joining in with more on this. Yash, what is the kind of quantum that PB Fintech is looking to raise here?
Well, Hormaz, just yesterday we had reported that the management is expected to approve a large fundraise for supporting a major acquisition which the company intends to make. In continuation of that, what sources are telling us is that the size of the fundraise itself could be upwards of about 3,000 crore rupees. PB Fintech at this point of time has about 5,500 crore cash on its books, and according to our sources, the size of the acquisition could be upwards of about $1 billion. So it's going to be a large fundraise with a large cash already present on the books for the purpose of supporting an acquisition which could be upwards of about $1 billion. As far as the acquisition and the geography itself is concerned, we've been told that the company is evaluating a couple of target companies in UK as well as Europe. As far as the board meeting is concerned, the next one would be on February 5th, where the size of this fundraise would be finalized and announced to the exchanges. But importantly, what I've been told is that this particular acquisition would be in the space of insurance product distribution and aggregation, similar to what the company does in India. Of course, this would be in the international market. What I've been told, as I said, the geography could be UK or Europe.
All right, Yash, many thanks for those details. Now, it is a CNBC-TV18 news break confirmed. Advent International is all set to pump in 2,750 crore rupees into Aditya Birla Housing Finance. Let's go across to Rachna Dhanrajani, who broke this story yesterday. Rachna, how much stake will Advent hold?
Well, this does mark a CNBC TV18 news break confirmed, and it marks one of the largest capital infusions in India's housing finance sector in recent years, that is. Now, the boards of Aditya Birla Housing Finance and its parent company, Aditya Birla Capital, have approved this proposal. The investment will be made through Indria Limited, which is an Advent entity, and the deal is structured as a primary capital infusion. Completion of the transaction is, of course, subject to shareholder approval and regulatory clearances and other customary conditions. Now, let's first understand, why does this deal matter? The 2,750 crore rupee check significantly strengthens Aditya Birla Housing Finance capital adequacy and balance sheet, providing firepower to scale its loan book at a time when housing financiers are preparing for the next phase of credit growth. Now, the capital is expected to support expansion in affordable and mid-income housing segments that continue to see resilient demand driven by urbanization, infrastructure-led development and policy support. Now, housing finance companies are also under increasing focus from regulators and rating agencies to maintain stronger capital buffers and diversify liabilities. A large long-term private equity infusion not only supports growth, but it also gives a chance to enhance confidence among debt investors and bond markets. Now, this deal also comes amid a broader revival of investor interest in India's housing finance space. Over the past 12 to 24 months, that is, we've seen Shriram Finance, Warburg Pincus deal happen, we've seen Aavas and CVC deal happen. So against this backdrop, Advent's 2,750 crore rupee investment stands out as one of the biggest primary equity infusions in the company. Now, this is second only to outright acquisition or deals like Shriram Housing Finance that I mentioned. But this particular transaction is also interesting because this marks Advent's second stint with Aditya Birla Group. The global PE firm was previously an investor in the parent company, that is Aditya Birla Capital, and has since monetized parts of that exposure. Its return this time, though, is to the subsidiary is very focused, and it of course shows the renewed conviction that people are seeing in the sector. With this specific bet that Advent has made, things are looking up for Aditya Birla Housing Finance.
All right, Rachna, many thanks for taking us through all of those details. But with that, it is a wrap on this edition of Business Lunch. Mid-Cap Radar takes all the action forward.